I missed a closing. I actually missed it by 1 week, and I did it on purpose because that's what was best for my borrowers. And in the very same month, I turned around and moved up another closing by 2 weeks, saving my clients even more money. Why? Because when I say I'm in it for your best interests, I mean it. Now, before you get too fired up with me, of course, I work with the buyer's agents and the listing agent to make sure everyone knew why we needed to delay the closing and then move up the other. Let me show you how real client-centered lending gets done. In a market that's getting tighter by the second, you need to realize something very important. Not all mortgage professionals are created equal. With fewer and fewer loan officers nationwide, working with a true expert is no longer a luxury, it's essential. It's the difference between blowing past the finish line with a funded deal in record time or watching your contract fall through because of miscalculations, overlooked details, or slow underwriting. For the real estate agents who want to stand out, for your borrowers who want to save money and avoid nightmares at the closing table, and for the investors aiming to seize market opportunities before they vanish, let me make this crystal clear. You need a mortgage professional who knows this game inside and out. You need someone who can maneuver through interest rates, handle complex loan programs, and negotiate closing costs so you walk away feeling like a champ. The reality is, if you're not partnering with a tried and true loan officer right now, you're risking wasted time, higher expenses, and a whole lot of stress. That's where I come in. My commitment has always been to put my borrowers' best interests first, to elevate my real estate referral partners, and to ensure every transaction is not just closed, but closed with speed, precision, and cost savings. Whether it's a first-time home buyer on a tight timeline or a seasoned investor needing a complex financing package, I've got the strategies, the relationships, and the unstoppable drive to push these deals through. I'm about to share 2 real-world December transactions that underscore my expertise and dedication. 2 stories that highlight how I handle challenges, how I expedite timelines, and how I keep everybody's best interests front and center. By the end, you'll see exactly why you should be working with me if you're serious about success in real estate financing. All right, do me a favor, listen up. I'm about to walk you through a recent transaction that proves exactly why working with a professional, proactive mortgage expert can transform a stressful situation into a win. So here's the situation. I had a newly married couple in the Atlanta tech scene, both solid W-2 earners, pulling down 6 figures combined. Despite being approved for well over what they actually needed, they didn't want a massive debt hanging over their heads. So honestly, props to them for not extending themselves and actually being financially responsible. They locked onto a home in West Midtown for about $447,000, which was comfortably below their upper limit. The contract came in November 6th with a closing date set for December 5th. In real estate terms, this is more than enough time for a standard deal. First-time home buyers, yes, but these 2 had everything squared away. Income documentation, check. Solid credit, check. The appraisal, it came in above the purchase price, so they walked into instant equity. W-2 income, no big job changes, plenty of assets in the bank. On paper, it's about as clean as it gets. But here's the twist. Right before closing, interest rates took a little bit of a tumble, a welcome event in today's volatile market. This home qualified for my community lending program, which can offer a substantially lower transaction cost and interest rate. Especially when rates drop, you can really take advantage of it. But it also meant the loan needed to go back through underwriting with my investor to lock in the new lower rate. The payoff, 3/4 point reduction, which can mean some serious monthly savings. The downside, I needed a little bit more time. Now, you know how these things can go. Buyers get anxious, sellers get impatient, and agents just want the deal done, and I get it. In a high rate environment, though, saving that much interest is huge. I laid everything out for the buyers and their agent, showing exactly how the improved interest rate would keep more money in their pockets, not just next month, but for years to come. However, this wasn't just their call. We had to loop in the listing agent and the sellers to request an extension. Here's where trust, transparency, and teamwork became everything. I showed them we were already clear to close at the original rate, so nobody's time was being wasted. But if we got those extra days, the buyers could lock into a significantly better financial position because I was able to renegotiate the interest rate. The sellers did not have to say yes. They could have demanded we close on December 5th and been done. But once everyone saw the logic behind the small delay, they agreed to push the closing just a little bit further, literally 5 more days. And frankly, we were clear to close the following day. The result, a newly married couple stepping into their very first home with instant equity and an interest rate that's well below what most people are seeing right now. This was a game changer for the monthly payment, and more importantly, it shows what can happen when you have a lender who doesn't just shuffle papers, but actually keeps an eye on the market and spots opportunities and fights to get you the best deal, even if it means extra work and a few more days on the timeline. Bottom line, your loan officer should be someone who tracks every move in the market and isn't afraid to jump in and renegotiate terms if it means you'll save big. You deserve a mortgage pro who's in your corner, champion your best interest from start to finish. Because in real estate, especially for first-time home buyers, those small details and last-minute pivots can save you a stack of cash and give you a massive head start on building that equity. That's exactly what happened for this young couple in West Midtown. And if you think this was a one-off success, trust me, think again. This is what happens when everyone, the buyer, the seller, the agent, and the lender come together to make a deal work. Let me tell you about a deal that had every reason to fail and why it ended up a full-blown celebration instead. Do me a favor, picture this. Experienced buyers in Cherokee County, Georgia, looking to close on a VA loan in mid-January. Totally standard, right? Except I stepped in, took one look at the situation, and proposed we move the closing date all the way up to December 31st, right in the middle of the holiday madness. Now, why would I ask for a rush like that? It's pretty simple. Cherokee County recently changed its senior property tax exemption rules, and my buyer needed to close before year's end to lock those tax benefits in. In fact, he turned 62 in October. Missing that window would have cost him literally $5,000 more a year for the next 5 years. Money I'd much rather see stay in their pockets. So here's the rundown. I got the contract on December 15th, which, by the way, was a Sunday. That left me a whopping 2 weeks to close, complete with Christmas in the middle and then New Year's right at the end. If you've worked any job at that time of year, you know what a skeleton crew looks like. Offices, half-staff, people on vacation, shorter work hours. Basically, everything conspiring to slow down the process. On top of that, this was a self-employed borrower. If you don't know, self-employed borrowers can have more complex documentation requirements. Tax returns needed to be crystal clear. Income has to be verified in multiple ways. And we often have to run into conditions in underwriting that are specific to self-employed borrowers. It's definitely not the type of file you typically would just breeze through when timelines are tight. But guess what? My buyer was an absolute rock star. He moved mountains to get me every piece of documentation I needed, from the updated bank statements to proof of self-employment. Meanwhile, I coordinated with the buyer's agent, listing agent, attorneys, and my processing team to keep all the ducks lined up. The appraisal, ordered immediately and rushed as much as possible. This is a VA loan, so there's only so much we can do. The closing disclosure, out the door so we could satisfy all the legal requirements. Everything had to come together perfectly to close at noon on December 31st, and it did. We got the final clear to close on the 30th, just in time. The buyers walked into their new home under a VA home loan program with no delays, and we popped champagne at the closing table. That's not just a figure of speech. We literally popped champagne. There was actually champagne because we all knew that this was a borderline miracle. Here's the point. People often assume VA loans are slow or complicated. They can be if your lender doesn't know what they're doing. But when you've got a professional team that understands how to navigate the VA process, it can close just as fast as any conventional or FHA deal that's out there. Holidays, skeleton crews, and all, it doesn't matter. It can still close on time. This transaction took the efforts of everybody involved: buyers, sellers, agents, underwriters, appraisers, title companies, and me and my team. To push it across the finish line on time, we all had to come together. When a closing date matters, it really matters. There's zero room for missed calls, slack follow-up, or wasted days. And if you're self-employed and you've been told, oh, this may take a while, it doesn't have to. The moral of the story here: when you work with a professional who knows how to keep every moving piece on track, there's almost no situation that can't be tackled. And if it means pulling off a 2-week end of the year close complete with holiday closures, well, let's just say I'm always up for that challenge. At the end of the day, it's not about ticking boxes on a checklist. It's about doing the right thing by people you serve. Sometimes that means pumping the brakes. Other times it means slamming on the gas. If you want a loan officer who's ready to call those shots for your benefit, not theirs, then it's time we connect. Because in this game, your best interest is the only finish line that matters. And that, my friends, is guaranteed. Have a great day.